let's skip to the most interesting part of what I think of as the most interesting part of this week, which is crypto. FTX imploded. Well, since you're my crypto expert, what is your opinion?
First of all, I'm not remotely a crypto expert. I'm striking that from the record. The facts as they happen, this is actually tough. I'll just explain kind of the aftermath where we stand today, because there's probably going to be stuff that comes out after we record this video. FTX, which is a massive global exchange, I think the third biggest in the world behind Binance and Coinbase, is going out of business. I think insolvent is the right word, and seeking a bailout, which the latest reporting is that it will not receive this bailout. The intrigue and irony associated with this is basically unlimited. Like it's the gift that keeps on giving. You can find interviews with Sam Bankman-Fried, who was crypto's golden boy for a long time, the guy who was bailing other people out this summer when Voyager and when not Celsius, I don't think he bailed out Celsius, some BlockFi, he bailed out BlockFi. He was thought to be the liquidity provider, right? The guy who stays stable through all the things, the whiz kid, the high frequency trader who can't fall from grace. He's fallen from grace this week. That's the big thing. Sam Bankman-Fried and FTX are in a big hole that may or may not ever get plugged. Way that they got there, convoluted, hard to say. It has something to do with the proprietary trading firm that he initially used to get rich, which is called Alameda Research, using the token issued by FTX, the FTT token, in some sort of way that is very, as Matt Levine described, dark magic.
The thing that surprises me is Alameda Research, which is it's basically owned and operated by Sam Bankman-Fried, right?
Yeah, I think he has partners, but yeah.
Got it. But so they actually probably bought a bunch of tokens, FTT, right? And then I think is it that they needed leverage and they used that as collateral?
I think that may be a very, very simplified version of what happened. But yes, they definitely use leverage. And to be fair, market making as an activity, which is, I think, a lot of what they did, market making is not doable without leverage. Like unless you have an infinitely huge balance sheet, market making very much requires access to leverage to be at all economical.
Yeah, it requires a huge balance sheet. Leverage to do it efficiently.
That's right. That's right. It's not a great return on capital without access to leverage.
If you're exposed to one token and that token goes kaput, and then you don't have the collateral to call in from your clients. If I'm in an exchange and I don't have the collateral to call in to my clients, then the exchange has to pony up the difference. So because you owe money, the exchange owes usually they're an intermediary, and so they get caught into this, and then they need to put in money to satisfy that black hole that their biggest customer left. This is the share price of FTT, right? The token.
You got to zoom in on the right over there to make sure that part is clear.
I just don't understand. Look at this drop. You went from, maybe the previous low was $22 to now it's trading at 3.49. Now that's a 90% drop. It's hard to survive. Look at the volume also.
I want to share a couple other just interesting facts that you may not. This is just background that you may or may not have had if you're not familiar with this. First of all, FTT not tradable and not accessible on a technical basis to U.S. people. So FTX did its work and decided what it was going to decide. FTX, the exchange that offers leverage also, so their futures exchange, FTX.com, is not available to U.S. people. So U.S. investors cannot trade on leverage. Maybe they can, but their main kind of big leverage exchange business was offshore from the U.S. And FTT, the token, if you were trying to buy it as a U.S. investor, you had to lie. Basically, you had to VPN and go say, I'm outside the U.S. in order to access it. So there's kind of this offshore onshore thing going on. Sam Bankman-Fried has also tweeted in the past couple of days about withdrawals being like they were limited for FTX.com. I think that the last I read, they were going faster for FTX.us, which is the US site. The last thing I want to make sure of that Matt Levine just wrote about in Money Stuff is that this is not a liquidity crisis. This is a solvency crisis. The difference is important. Solvency is about assets and liabilities, not timing. He writes, the problem is that FTX took its customers' money and traded it for a pile of magic beans. And now the beans are worthless and there's a huge hole in the balance sheet. That sums it up as simply as you can. There's much more intrigue. The possibilities with Binance and the kicking off of all this by the founder of Binance saying that he was selling a ton of FTT tokens. This is going to be just like this will be like a fantastic like Vanity Fair cover story, right? You're going to read like 40 pages about the intrigue of everything that happened. But it's still happening right now. Like it's not resolved. But Sam Bankman-Fried is seemingly no longer golden boy as of yesterday, maybe.
And then you had the comments from Brian Armstrong, the CEO of Coinbase, trying to clarify what his platform does and does not do, which was interesting too. Kind of like, don't put blame on me on this, or like don't mix me into this because I don't do this stuff.
I'm going to say one more thing about this. Yesterday, the Up Only TV podcast had its most insane episode ever by far, in which Do Kwon, remember the Terra guy, who's an American citizen, by the way, like a Stanford guy, he's functionally on the run, but he got on the podcast on Twitch live, and then Martin Shkreli, that guy, the pharma bro, gave him tips about prison on the show. It's very funny. You should watch if you want kind of yesterday's reaction to all the stuff.
How long was he in prison for? 4 years, 3 years?
Yeah, 3 or 4 years, something like that.
Yeah. And, you would argue that, his fraud wasn't as deep, wasn't as, the scale wasn't as big as...
This is Do Kwon's, yeah.
Yeah.
I agree.
I have news about the Powerball. I'm not the winner, but it was very interesting to see that the jackpot went slightly above 2 billion. It was like 2.04. I was very curious because I'm always curious, like, okay, it goes from 2 billion. That's like the headline number. Okay, what is the cash value after taxes? First of all, 2 billion is the sum of all the payments across 30 years. So it's an annuity payment, I think, over 30 payments. And so they're able to pay you more. And so when you take the cash value, it goes down by a significant amount. And
the present value.
Is it? I don't know what the present value. Well, if there's a present value, there's an implicit interest rate there. So that's an interesting calculation, which we could, in a follow-up episode, just, review that. What interest rates are they using? And can you get more in the market? But here's I usually go to this website. It's called usamega.com, I think. Yeah. And they have an analysis here of, I put here married filing separately, of the Powerball jackpot, right? The cash value, which is stated also. And then if you apply whatever tax rates, how much is left over from the federal standpoint, you have, 628 million from a 2 billion jackpot. You get in the cash value, you get 628 million. Now, if you live in New York like I do, no, it's not that amount. It's much less. Welcome to New York. It's 519. Where did the difference go?
Wait. You're telling me that on $2 billion jackpot, if you took the cash today, are we compressing the payments into just today and saying after tax? Are both operations happening?
Yep.
Okay. So if you need to get it all today, you're getting 628 if you're married filing separately.
After paying federal taxes. But if you live in New York, you have to pay state taxes as well. Yeah. So you're left with a fourth of that, jackpot number. It's not bad to have 519 million, right? What's interesting is the other high tax state, the winner is from California. California, though, this is a very interesting fact here. No state tax on lottery prizes.
Fantastic.
Great state to be a lottery winner.
Love this.
So California, being one of the highest tax states, does not charge you money on. That is called a powerful lobby.
Yes, it is.
So they just, compared to New York, they just here, didn't care for getting, $100 million. So, yeah. Anyway, very interesting to see this. I wonder what the winner is going to do. I wonder how they're going to claim it. Usually, if you're financially savvy, you will put this. If you actually look, I'm going to actually show you what a Powerball ticket has at the end. So the Powerball ticket here is who's claiming it. You put the name. You could actually put it in a trust directly. The idea is like, okay, you don't want to do it after you claim it, right? You want to do it before you claim it and say, hey, I bought this ticket. I actually put it in the trust. Oh, the trust made money. Great. You understand? It's not like I created it. You need to have the kind of like the trust beforehand.
A great write-up. I think it was on Quora years ago. It was basically like, what should I do if I win a huge Mega Millions? And it said, it was a little bit of a cheeky write-up, but it was basically like, don't talk to anyone. And I mean anyone. You should fly to a major city, DC, New York, LA, San Francisco. You should walk to one of those white shoe, very fancy law firms. Walk in physically and sit down and do not leave this office of very expensive, very trustworthy lawyers until you get your stuff done, get your planning done, because you will corrupt the planning process and the decision-making process, which can be absolutely nightmarish if you tell anyone about this beforehand. So go make your decisions, go ink them. Right. And that's part of that trust creation process, right? If you're going to put this in a trust. But one last question on this, Gabe. Would I get a job at your family office if you made $500 million? Do I get an interview or?
Yeah, you definitely get an interview. I would probably definitely get you a job here.
Nice.
We will continue to work. I am not one of those who will stop working.
I know.
We will have fun working.
Yeah.
That's the difference. I was reading about this. Like, what do you do if you win the lottery? How do you remain anonymous? That's one of the key aspects. Like, how do you actually keep your anonymity? Because in some states, you actually they have to disclose who won the lottery. Mm-hmm. So you create a claiming,
like the lottery itself has to the state or to the public or to the
to the public. Mm-hmm. Yeah, you have to use either a claiming trust, mm-hmm. or you could use a bridge trust. I don't really know what the differences are, but like I've heard of them. Basically, I think the bridge trust is just like the living trust. The claiming trust, I think it's more of a irrevocable trust.
I've heard of lawyers who specialize in this stuff. I got to say, I would call Ike DevG from a previous episode and just say, Ike, take care of me, dude.
Yeah. I think that was an interesting topic. The other thing that happened this week, and this is something I've been complaining a lot about to my my wife when we look for places on Airbnb, is that they don't include the total with the cleaning fees. You can't evaluate different options correctly. You just have to, once you've made the decision, like you're kind of set. And finally, he says that he's listened to the public and he made changes and feedback. Brian Chesky, the CEO of Airbnb. However, the European Commission actually mandate them to have them changed, a couple of years ago, and it was coming down the pipeline. So I thought that was kind of funny that he said, oh, we're listening to you, but we're making it more transparent, blah, blah, blah. But at the same time, you have the European Commission breathing down on their necks. So interesting way. I wish this could be done, include toll fees for airlines. The problem with airlines, a lot of the fees that they charge are optional, right? You either want the service or not. So that's a little bit different. Another thing I've been tracking recently, and I think this is a topic I didn't mention to you in the beginning of our conversation. Just want to bring this to your attention. There's this website called layoffs.fyi, and it shows actually the amount of layoffs that are happening compared to 2021. I don't know if the graph is here. Here's the 2022 versus 2021. It just appears that there's going to be way more layoffs this year than last year. That's the trend. Like even today, Meta announced 11,000 employees to be laid off. Redfin almost 1,000. Yesterday, Salesforce said that they had reduced, by 1,000. But it's coming. Like it's actually like the wave is starting to like gain momentum. If you look at it, like 21,000 people laid off in this previous month. I bet you in 2021 that was not the number. And here you can see that the green lines, which is 2022, is much higher across the board versus the blue lines, right? So 2020 was COVID year, so transportation, travel really took the brunt of it. And I wonder if retail, but now everything seems to be, the consumer specifically here, like 17,000. That's a lot. Real estate, this is Redfin. Booking has let go in 2020. 25% of the people. Twitter, which is a disaster right now. Uber in 2020, better in 2022. So this year is going to be like probably end up being a bigger year than 2020, which was COVID.
Layoffs are the most visceral part, I think. People actually losing their job is very, very real, very personal. If there's anyone who's been laid off, whom we can assist in some way.
Yeah, so if you got laid off, contact me or Robinson, especially if you work at a tech company, and we can help you specifically around, I guess, stock compensation. Like there's a decision there you have to make, and it's a tough one, right? Like you have stopped having probably a cash flow incoming, and then you have to make a decision whether you're going to spend money on exercising a stock that's probably like weakened. But there's tax consequences on that, and we can help you make a decision. The other topic, which is a short one on my end, which is the ISM Manufacturing PMI, Purchasers Managers Index. I think this is just like a survey, and what it really means is that if the manufacturing economy is actually expanding or not. Above 50 is expansion. Over a course of the history, like we've had mostly expansions, right? But it goes in cycles, clearly defined here. This is all the way back to 1948. So we've had many expansions, but it just looks now that we're going down to a correction here, and who knows how deep it will be.
What's the latest reading? I can't see that.
It's 50.2.
50, they say, is a very key number, right?
Yeah, so above 50 is expansion, below 50 is contraction of the manufacturing, let's say, economy.
The U.S. manufacturing economy specifically.
Correct, yeah. I would say the Eurozone has its own PMI. We can look at the China PMI, but I think that, China's in contraction too. China's had some issues with the COVID. It's barely been in an expansionary. And then tomorrow, we're recording this again, November 9th. Tomorrow is a big day because you have CPI numbers coming out. It does not look healthy. It literally does not look good. CPI of 0.62. You multiply that times 12 and you get 7.44. That's higher than the last reading. And it's trending upwards, right? Like that's the big issue. Expect tomorrow a very turbulent market day. This is the actual reading.